that is how you can find stocks ideal for your profile, stocks that will be tailored to your risk appetite, and then build great investment portfolio where your risk will always be, potential risk will always be lower from all other portfolios on the market with the same stocks that you have in your portfolio, but with different weights of those stocks. So let me show you practically. We go to the Diversset webpage, press try the app, and now you have to answer two simple questions. Choose your investor type. Risk averse is someone who is not very risky, avoiding risk. Risk seeking is someone who is willing to take higher risk and potentially higher return. And moderate is someone who is uniting these two types. Let's go with the risk-averse investor. Then the second question is your expected return, your portfolio return or required return. Let's put 15% as an example, and now you can press this show the result button, and you can see the application is applying the filters to find you the stocks. So you don't have to apply filters manually as in other stock screeners, ETF screeners. This application finds you stocks and ETFs. This, as you can see, it's a funds, and these are the stocks that will be ideal for your investor profile, for your risk appetite. And then what you can do, as you can see, this is the systematic risk or beta. This is the market cap, the size. Now you can choose 10 the most liquid stocks, and the application will build your portfolio from 10 the most liquid stocks from the list. Or you can leave this list as it is, and if you don't choose anything manually and press this build the portfolio button, the application will automatically build your portfolio from 10 most liquid ETFs and stocks. So let me go with this selection, build the portfolio. You can only choose 10 stocks maximum, and now you can see the application build your portfolio, and now it says return issue because it couldn't build your portfolio with your required return of 15%, and now in this case it says no efficient portfolio with your indicated return of 15%. That's why the application constructed you maximum return and minimum volatility portfolio. So what it says that if you invest in these assets, this is the funds and these are the stocks. So for example, if you buy 8% of Alphabet, if you buy 13% of Apple, and if you buy this fund 16%, and if you will have this asset allocation in your portfolio, you can have portfolio expected return of 176%, and portfolio is expected volatility 167%. So in this case, the application build your portfolio from the maximum possible return and the minimum possible expected portfolio's volatility. So again, you can use this application. Sometimes the application is building your portfolio with your return, but in this case it says, listen, we can build your portfolio with higher expected return, not 15% as you indicated, but 176%. Why not to build your portfolio from this? And that's why it says not 15%, but the maximum return portfolio was built. And you can also build the portfolio, choose other stocks. Let's say you are risk-seeking investor. Let's say risk-seeking. As you can see, the return changed. It became slightly higher right now. So it is ranges from 20 to 80%. From 15%, I'm sorry. Let's choose, let's say 45%, because for risk-seeking investors, you can assume higher level of risk and higher level of return. That's why the application also provides you the wider border, the wider range. And so you can choose the expected return of 45% under the risk-seeking investor type, show the result. And now the application again applies you filters automatically, like in other platforms. You have to choose manually the filters, the financial ratios, but here you don't have to choose anything. And as you can see, these are highly risky stocks. You see the beta, you see the smaller market cap, and these are the stocks. You can choose manually, but if you choose manually, please choose 10 stocks minimum, just the 10 stocks. Or if you don't choose anything, just build the portfolio. The application will automatically choose 10 the most liquid instruments, stocks and ETFs from this list, and build you your efficient portfolio. Let's see what will happen right now. The application applies the Markowitz model to allocate your weights in such a way as to give you the lowest possible loss given your required return. So in this case, yes, the application says that it is possible, it's not saying build error, in this case it's possible to build your portfolio with your indicated return of 45%. It says yes, it can give you a return of 45% and your volatility of 3.68% if you allocate this asset weights. For example, a firm holding, if you invest 0, don't buy this stock. Matador, if you invest 13%. Permian Resources Corporation, if you invest 25%, and so on. If you allocate these weights, you get this expected return and this expected volatility. So that is how you can use this application. It is free. It is a web-based application, very powerful application. It is scanning the market, applying the filters automatically, and then uses the Markowitz model to build your efficient investment portfolio from the stock that it chosen for you, for your investor profile, that will perfectly match your risk appetite. So thank you very much for watching this video. I hope it was useful.